Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am Yatin Mota.
Well, Yatin, it's the fag end selling that has dragged the Nifty below that 19,400 mark. In fact, even the Sensex ended lower by about 200 points or thereabouts. Of course, it's the earnings season that's all set to be kicked off by TCS and HCL Tech, which will be reporting earnings later this evening. And ahead of that, of course, you can see investors turning cautious. It's the IT pack that was down somewhere around 0.5% or thereabouts. The likes of TCS, HCL Tech, Infosys among the laggards. If you look at the broader end of the markets, they have continued to outperform. Even today, the Nifty Small Cap Index is outperforming, up somewhere around 0.5% or thereabouts. As I mentioned, IT under pressure, but sectorally, metals and private banks were the other pockets that were under a fair bit of pressure. On the flip side, PSU banks and realty among the top sectoral gainers. If you look at the Nifty gainers, ONGC, that stock was among the top Nifty gainers on the back of a resurgence in crude prices. In fact, Brent is near that $80 mark once again at a 10-week high. So that has pulled up ONGC in trade. You have the likes of Eicher Motors gaining for a second day on the trot. Nestle, Kotak Bank, Asian Paints, some of the gainers. On the losing end, Infosys, top Nifty loser. Ultratech Cement on the back of UBS downgrade. Tata Motors, BPCL as well as HDFC Bank. HDFC, last trading session for that stock, given the fact that tomorrow we'll see the new HDFC Bank trade on the exchanges. Aside of that, lots of action in the broader markets. As I was mentioning, they are holding up. But I think gaming stocks, online gaming stocks were in focus today.
Absolutely, and after the GST Council decided to levy GST or rather a sin tax on gambling as well as online gaming, which involves money, we had a lot of the listed entities also feeling the heat. In fact, stocks like Delta Corp dipped as much as 25% in intraday trade. We also had Nazara Technologies that also moved down because clearly the government really wants to curb speculation and make the youth more productive rather than playing games and betting on casinos. So that is the kind of mindset we have because of which the stocks on Dalal Street fell in this particular gaming sector. But what's moving in the mid-cap space apart from all of these gaming stocks were the likes of defense stocks. Once again, the Mazagon Dock, again the stock moved up 9%. BSE Limited, after announcing the buyback, we saw the share surge by nearly 70-80 rupees. In fact, today also the stock moved by nearly 8%. We also had the likes of NCC, LG Equipment as well as JB Chemicals moving in trade. So these were the mid caps which moved quite smartly in trade, but let's talk on the stocks on which we are focusing for trade today.
Well, Yatin, what's the first stock you want to take us through?
So the stock today on my radar is Pidilite, and Citi has downgraded the stock of Pidilite. And if you look at Pidilite, the shares declined by nearly 2.5% in intraday trade. There was a small bit of recovery, but they had some caution in terms of the stock price. Now Citi has downgraded the stock. They have cut the target price also. They have cut the target price to a level of 2,200 from the levels of 2,800 per share. It says that FY24 estimates do expect a margin expansion, but it will not happen. They say that the current valuation of 70 times 1 year forward price to earnings ratio looks unsustainable, and probably the earning growth or the revenue growth would be in mid double digits. So 12 to 13% kind of a growth on high PE ratios is unsustainable according to Citi, and hence they have downgraded the stock of Pidilite.
All right, Pidilite as a stock, hasn't really done much over the last 1 month. I think down somewhere around 2.5% or thereabouts. So that's one negative news coming in for Pidilite, which is of course under pressure in today's session. Of course, the big pocket we will be watching out for, of course, is the entire IT basket, given the fact that TCS and HCL Tech will be reporting their numbers later this evening. Let's talk about TCS first. May report a flattish to 0.2% CC revenue growth on a quarter-on-quarter basis. Remember, the first 2 quarters are usually a seasonally strong quarter for some of these IT giants, but this time around things are a little different, given the fact that we've seen a scale back in discretionary spends by clients, given the fact that interest rates in the US are at 15-year highs, and of course the capital, the cost of capital has gone up for businesses, which is why they are scaling back on their discretionary spends, and that is of course weighing in on some of these IT companies. So macro challenges in North America and continental Europe continue, and because of that, some of these IT companies will see some weakness in their first quarter performance. If you look at TCS's EBIT margins, last quarter they came in somewhere around 24.5%, missing estimates of 25% that the company had said it could achieve. But this time around, we could expect another 80 to 90 basis point scale back in the margins, given the fact that the company had announced wage hikes in the month of April, and on the back of that, margins could come under further pressure in this quarter. As I mentioned, discretionary spending has seen has seen a slowdown in the near term, and which will continue in the second quarter as well. But mind you, this is K. Krithivasan's maiden press conference, direct press conference as the new CEO. So we will be watching out for his commentary, any change in strategy, his vision for the company going forward. So that will be in focus. Of course, commentary on the BFSI, retail and telecom sectors will also be watched out for. On the deal wins front, we have seen quite a few deals that were backed by TCS in the quarter gone by, but then there was a major deal cancellation as well. US based Transamerica had cancelled a $2 billion deal in the quarter gone by. So that is something that we will be keeping a watch on. HCL Tech, on the other hand, again tepid quarter expected, net profit likely to decline sequentially, revenues likely to grow at 0.8% or thereabouts sequentially, and even EBIT margin is expected to decline somewhere around 60 basis points or thereabouts. So a lot of these IT stocks, street is fairly divided about whether you should be looking at nibbling into them or not, because experts believe that there could be more downside going forward on the back of tepid earnings, which is why I was talking to Andrew Holland in the morning, and he said maybe you should wait for another quarter before nibbling into these counters. Remember, some of these stocks PE multiples have come very close to long-term averages, and since last quarter the stocks haven't really moved much. They attempted a comeback but really didn't materialize. So that is something that of course we'll be watching out for, the IT earnings and how the stocks react in trade tomorrow morning. Yatin, the other stock on your
so the other stock on the focus list is again a downgrade by Citi, which is in Titan. Now the rationale is the same. Citi believes that 60 times 1 year forward earnings price to earning ratio is not sustainable. They feel that the valuations are expensive, and that is the reason why they downgraded the stock of Pidilite and now Titan as well. They have cut the target price to a level of 3280, and ever since the quarterly update for Titan has come, the stock has been sideways. So now probably the street believes, especially brokerages like Citi, that the valuations are slightly discomforting, and hence they have downgraded both Pidilite and Titan. And if you look at Titan, clearly the valuations always have remained raised. Whether or not earnings momentum sustains moving ahead is a question mark, but brokerages do believe at this point in time the stock is fully priced.
Well, the stock of Titan has seen a 30% uptick nearly over the last 6 months or thereabouts. So yes, it has run up quite a bit, and of course we'll see how the earnings pan out when they report the quarterly earnings. But with that, I think we've come to the end of this edition of Closing Bell. But on a programming note, don't forget to tune in around 5:15 p.m. When we'll be getting you special coverage on the TCS quarterly performance. So tune in for that on Money Control. And of course, if you have any comments, leave them in the comment section below, and we'll take note of them. But for now, it's a goodbye from Yatin and me. Thanks a lot for watching. Stay tuned to Money Control for all your other financial news updates.